The World Bank released its Global Findex database today, which surveys how people in 123 countries use financial services and fintech. And we're joined by the lead author of that report and lead economist at the World Bank, Leora Clapper. Thanks so much for being with us today. Now, how has the COVID-19 pandemic really spurred financial inclusion and driven a big rise in digital payments?
Thank you for having me. Across the developing world, the Global Findex database finds that in this pandemic era, account ownership has increased by 8 percentage points. 71% of adults have an account, up from 63% in 2017. In the developing MENA countries, on average, 48% of adults have an account, up from 43% in 2017. We've seen especially big increases in account ownership in Morocco, in the West Bank and Gaza. In comparison, in Lebanon, account ownership has declined. The share of adults making or receiving a digital payment directly from their account, or using a card, phone, or the internet, grew in developing economies to 57%, up from 35% in 2017, and outpacing growth in account ownership over the same period.
And how does financial inclusion really build resilience at the household level to better manage financial shocks?
So researchers have shown that households and businesses that have access to financial services, such as payments, savings, credit, insurance, are better able to withstand financial shocks than those that do not. Banked adults are better able to avoid a slide into poverty because they find it easier to rely on savings or receive financial resources from their friends and family in the event of a financial emergency, such as an income loss or crop failure. People without an account must instead manage their money using formal mechanisms. It may be less safe, less reliable, and more expensive than formal methods.
And how many unbanked people would you say there are in the world, and what are the real barriers to them having accounts?
So globally, about 1.4 billion adults are still unbanked. In the MENA region, about 140 million adults, about 50% of adults remain unbanked. Nearly all unbanked adults in the world live in developing countries. The most common reasons people give us for not having an account: the cost of having and maintaining an account are too high, banks are too far away. Only 10% of the unbanked adults globally cite religion as a barrier, but in Iraq and Morocco, about 20% of the unbanked cite religious reasons as one of the reasons for not having an account.
And how has the ratio of male to female account holders here really progressed over the years?
So in the MENA region, there are about 140 million unbanked adults. Within the developing MENA region, an average 54% of men and 42% of women have an account. In other words, men are 13 percentage points more likely than women to have an account. This is more than twice the developing country average. Although the gender gap in account ownership is large, since 2014, there has been a 7 percentage point increase in account ownership for women in the MENA region. It's worth noting, though we find no gender gap in the UAE, in Saudi Arabia, women are 18 percentage points less likely than men to have an account, which is the biggest gap among high-income countries. And there are some countries in the region who have made progress in narrowing the gender gap, while others have not. In Egypt, the gender gap fell by half to 6 percentage points from 12 percentage points in 2017. In Morocco, although account ownership increased by 16 percentage points, women remain 23 percentage points less likely than men to have their own account.
Very important research there. Thank you so much for sharing with us. Lead economist at the World Bank, Leora Clapper.
Thank you.